Welcome back, grade 12s. Yes, I'm sure by now you have a clear picture of exactly how to go about doing a question on asset disposal. And I'm sure you're waiting to get back to a desk where you can sit down and apply the knowledge and put into practice what you have learned from Matrix Uploaded for today. All right. In the last segment, we're going to be looking at note number 3, which is an important note. Why? Because this note here records all the information regarding your fixed assets. And remember, the fixed assets is a major component of your balance sheet. Think about it. Think about a transport company, right? Think about the vehicles and think about how important the vehicles would be to that particular company. A very, very important aspect of their business. And thus, for every business, it's important for them to know what is the value of my fixed assets. So this note number 3, which seems insignificant to you sometimes as an accounting student, is very, very important when we relate it to a business. Right, here goes. Let's look at note number 3. You always start with the top half of your note, okay? Depending on the information that is given to you. Let us assume we have our opening balances at the beginning of the financial year. So the first thing that we do is, let's look at land and buildings. We're going to select on the cost price, okay? Remember that fixed asset, land and buildings is not subjected to depreciation. And therefore, there will be no entries for depreciation with regards to land and buildings. However, let's look at this here. Can we have an addition of land and buildings? What do you think? Certainly you can. How would that happen? If we purchase more land and buildings, or if we construct additional property on our premises, maybe if we build an adjoining room, a warehouse, which we need, obviously, what are you doing? You are increasing the value of your land and buildings. So that's what we refer to additions at cost. Okay, now, could we have disposals of land and buildings? Certainly we could have. The company may run into some kind of liquidity problem where it becomes imperative for them to sell off some of the land and buildings. So yes, you could get a disposal of land and buildings and you would show that in brackets. Remember, all disposals are shown in brackets. Okay, we said no depreciation, so therefore you're not going to get any depreciation here. Nothing will happen. Got that? Brilliant. Okay. Now, obviously, you're going to take your carrying value at the beginning of the year. You're going to add any additions that you may have had, and you're going to subtract any disposals that you may have had for this financial year, and that will then give you your carrying value at the end of the year. Clear? Right. In the same way, you'll take your cost price at the end of the year, and in this case, because it's land and buildings, which is not subjected to depreciation, that two figures should be the same. Clear? All right, that's land and buildings. Let's look at vehicles. Vehicles, you would commence with your opening balance, your balance at the beginning of the year. There goes. You would subtract your accumulated depreciation at the beginning of the year. Note, grade 12s, that a bracket in accounting here indicates to you that you are subtracting. So you subtract your accumulated depreciation, and that gives you your carrying value at the end of the previous year. In other words, your carrying value at the beginning of this year. Clear? Right. Now what happens? Now we go and put in all the information. You bring in your additions at cost, which is a positive figure because you may have bought more vehicles during the financial year, right? Okay. Then you got disposals at carrying value. Now remember, you drew up a table. Remember the table? that I alluded to earlier on when we did asset disposal, your depreciation, your cost price, your accumulated depreciation, your carrying value, all of that, remember, deals with what? It deals with the asset that you are disposing. So then you would bring in your disposals at carrying value, and that is important. You then bring in your depreciation, and notice that both those figures have brackets around them indicating that you are subtracting. Clear? So you take that figure, add your additions at cost, subtract your disposals at carrying value, subtract your depreciation for the year, and that will then give you the carrying value at the end of the year. You then take your cost price at the end of the year, subtract your accumulated depreciation at the end of the year, and these two figures should then be in agreement. Now, exactly that what we've done for vehicles, you will do the same thing for your equipment. I'm sure now you are ready, you are raring to go and do what? To take a question paper and to work out a question on asset disposal. Right. Remember grade 12s. Ashraf says, aim for the moon, because if you don't get there, you certainly will be a shining star. Until the next time, keep your feet on the ground, aim for the moon, give it your best shot, because you want the best accounting result. Until next time, be good. Bye-bye.